Welcome to our Mortgage Insider Update for this week. Some positive news in the marketplace. 2 weeks in a row, we've had inflation numbers come in lower. Last week, Consumer Price Index came down as expected, and Producer Price Index also coming down this week. Next report to come out actually end of next week, right before the Federal Reserve meeting, will be the Personal Consumption Expenditure, PCE. So a lot of data coming in to help the Fed make a decision come they start their meeting on January 31st, come out with their decision on February 1st. Interesting with that, Federal Reserve Chairman Jerome Powell has tested positive for COVID. So hopefully he can get a negative test and show up to that meeting. I'm sure they can have it remote since they did that a few times a couple years ago. Let's dive into the market reports. So we see today the mortgage-backed security market is improved. The 10-year Treasury really making the news with a down to 3.4%. It's come down to below or right at its early December 7th low. I'd have to go back a little bit further to see any kind of a time period where we've been similar. So we are looking at overall interest rate market improving back to a level not seen since early December, but really before that, back in September, when we had our summertime lull and pullback. Really positive news there. The mortgage-backed security market, green was good on this chart. As the price increases, the interest rate to the consumer is going down. We've been hovering along the same line that has actually been since early December. I mentioned earlier, back into first week in December, actually, the mortgage-backed security market hit the same levels that we're testing right now. Overall, this is the 200-day average. We are improving to a point where we're getting closer and closer to the 200-day average, which if I go back 6 months, you can see we've been pretty far from that. Go back a year, even further from that. So really a positive turn where we've seen the bottom as far as the price of the mortgage-backed security. That means the high on interest rates back in October 20th, and an improvement since then. So with that, I'm going to go a little bit more into depth over the report we received last week on the Consumer Price Index. And we're going to make an estimate on when we'll see the true turn much lower on rates. Right now, we're hovering in the low sixes. If we keep in the positive steam that we've got going with positive meaning negative reports in the economy. So the economy is slowing down, and that is bringing inflation down, which is a positive. But if the economy is slowing down in the process, that means that there's less business being done. Retail sales today came out below the numbers that were expected for December, right through the Christmas holiday. So we did see a pickup back in October, and then November sales were down. December sales were down. Really not a great outlook for the economy into the cold first quarter here. We're going to dive into one more report on the Consumer Price Index. Okay, Consumer Price Index. Now, this chart's labeled, when will inflation peak? So what we're going to do is go back to June of 2021, when inflation reports month over month were coming out pretty high at 0.8%. We had a lull in the summer of 2021, only to have a run up into the fall 2021. Getting into January, we've seen numbers dip, we've seen numbers rise, but the last 3 months, this is really the story. We've seen October, November, and December all coming in much, much lower. Now, when these numbers post, they are replacing the year before. So if last year, December was 0.6%, this year, December was 0.3%, we have significantly lower year-over-year inflation. So notice in January, February were both higher numbers, 0.6 to 0.5%, compared to the 0.3 to 0.2% we've seen the last few months. If we had another month of January with a month-over-month core consumer price index coming in at around 0.3%, that's still going to be a drop from the year before. March, we're probably going to just break even, but then April and May. So the date we're going to post out there is May the 10th. That could be the day when we start to see the April report come out with much more positive, lower inflation month over month, still with the coming months of May and June reports that won't come out until June and July, could really show much, much lower inflation. This is coming into what's anticipated to be the Federal Reserve's next meeting on January 31st, where they're expected to raise interest rates slightly. There is really no consensus on 0.25% versus 0.5%. So with consumer price index looking positive over the coming months. That's still months away. So May 10th is a long way away. We are hoping to see rates break below the 5.99% number, right now hovering just over 6%. So we'll keep an eye on that. But if we get the positive news over the coming months into the May 10th report, we could see significantly lower rates like in the low fives. So we'll see how that plays out. That could make for a great spring selling season. Have a great day.